Hey everyone, Ben here. ARKW is an investment firm which specialises in disruptive and innovative technology. Their founder, Cathie Wood, is widely regarded as one of the original Tesla bulls, as she predicted Tesla's monstrous bull run when everybody else was doubters. ARK's active ETFs have actually been the best performing ETFs of the year and actually returned over 100% to shareholders, whereas the S&P 500 has returned a measly 14%. I personally was talking about ARKW long before the mainstream media was actually mentioning ARKW, but still it's nice to see that they're finally getting the recognition they deserve as a great investment firm. Thus in this video I'm going to be diving into the top 10 stocks in ARKW's most popular ETFs. This is part of a whole series I'm doing on all of ARKW's ETFs. So if you do want to check those other videos out, I'll leave those in the description below. But before we dive right in, if you're new around here, why not consider joining the investing family by hitting that subscribe button and turning that notification bell on. If you do find any value in this video at all, even just a little bit of value, feel free to give this video a big thumbs up. That helps out tremendously with the YouTube AI. And if you do wish to know exactly which stocks I'm buying, which stocks I'm selling, and access my entire six-figure investment portfolio, then check out that first link in the description below for the VIP membership group. With that being said, let's dive in. Okay, so let's dive into the ARKW, ARK's Next Generation Internet ETF. So year to date, this ETF has returned 157%, which is incredible. However, do remember all ETFs come with an expense ratio. So this does have an expense ratio of 0.76%. Right now, so kicking things off at stock number 10, we're going to do a countdown, and that is Tesla, no surprise, ticker symbol TSLA, and this makes up 9.32% of the ETF. So Tesla here, we're going to just dive into a couple of metrics. So price to sales, 25.6. So you're paying 25 times the company's sales at the current valuation. The company's just started to become profitable. Sales growth, approximately 45%, up to 50% you could expect for Tesla. Now, I did a full valuation on Tesla, a deep dive valuation in a variety of different scenarios. So I'll leave a link for that video in the description below. I believe that's the most extensive valuation using real numbers that anybody's actually done on Tesla, because people are just coming up with valuations from the top of their head. I've actually looked at some real numbers, some real industry growth metrics. So definitely check out that video if you're interested in seeing if Tesla is a potential buy right now. Okay, stock number 9, and that is TDOC, ticker symbol TDOC. This company currently makes up 4.13% of the ETF. Now, TDOC is a leader in virtual healthcare. We do everything else online these days, so why not see your doctor online? Now, I did plenty of videos on TDOC in the past, and I actually told you guys that ARKW was definitely going to make this one of their largest positions. Full disclosure, guys, I am a shareholder in TDOC also. So let's dive into a couple of metrics for TDOC. So TDOC price of sales, 45, so you're paying 45 times the company's sales. That is quite a high valuation for this company. However, let's check out this growth. So the growth rate for this company last interim period to this interim period is 109%. Now, generally, I see a growth stock as one which has grown at least 20%. 109% growth, guys. This is one of the fastest growing companies I've ever seen in my life. Balance sheet is also an absolute fortress with a current ratio of 6.52. Generally, anything over 2 is good, so a 6.52 means the company has plenty of cash on hand to cover any short-term debts and even acquire another company. Okay, diving in at stock number 8, and that is Square, ticker symbol SQ, and that makes up 3.92% of the ETF. So Square is the innovative fintech provider which is very popular with millennials. Their Cash App has proved to be extremely popular, and they even invested into a heap load of Bitcoin. The founder is also the founder of Twitter, Jack Dorsey. So price of sales for this company is 13, so you're paying 13.43 times the company's sales. Square stock has ran up quite a lot recently. Sales growth 139%, so this company is growing rapid also, so very interesting company, definitely one to watch. Okay, on to stock number 7, we've got ROKU, ticker symbol ROKU. This makes up 3.73% of the ETF. So ROKU is the video platform which has become extremely popular during the global lockdown. Price of sales for this company is 35, so you're paying 35 times the company's sales. That is extremely high. So the growth rate for this company is 73.1%. So that's extremely fast and extremely good for a growth company. Balance sheet is also looking quite healthy with a current ratio of 3.29. Okay, so diving into number 6, and we've got a surprising one. That is Grayscale Bitcoin, ticker symbol GBTC. So this makes up 3.72% of the ETF. Now we know Cathie Wood is a major bull on cryptocurrency and especially Bitcoin. She calls Bitcoin the reserve currency of all the other cryptocurrencies, and I do agree with her on that point. I actually did a full video on Bitcoin and cryptocurrency, comparing the different investor opinions on it, because Cathie Wood is a major bull on Bitcoin, but investors such as Warren Buffett and Ray Dalio don't really see that as a great investment. So I'll leave a link for that video in the description below. I highly recommend that video if you're interested in investing into cryptocurrency in the future to get some real opinions from real reputable people. Okay, so now diving into stock number 5, and that is Tencent, ticker symbol TCEHY. This makes up 3.51% of the ETF. So Tencent has been called the Facebook of China, but I think it's so much more. It's a global mega technology conglomerate. So this company has investments across a wide range of sectors. So you can see you've got e-commerce, JD.com, you've got WeChat, which is basically like WhatsApp in the West. You've got Douyu, which is video streaming platform, Huya, which is another platform. They've also done investments into Tesla. They also own, I believe, around 10 to 15% of NIO. So this is definitely a great company to invest into if you want some exposure to all these different technology players in one single company. The major risk with this company is just the fact that it's a Chinese company. So the political issues of China, the fact that many Chinese companies are known for, let's say, creative accounting. So they are the major risks with investing into any Chinese company, but still definitely a fantastic company to potentially check out. I am personally a shareholder in Tencent, and I do think it's a fantastic company for the long term. The price of sales for this company is 12.94. The stock did have a major pullback, and I did a video on this, and that's when I sort of loaded up on a few shares on Tencent. Sales growth for this company is 29%, so that is incredibly high and incredibly good. So the company's market cap is around $700 billion, so this is not a small company by any means. Okay, on to stock number 4, we have Spotify Technology, ticker symbol SPOT. This makes up 3.15% of the ETF. So Spotify Technology price to sales 6.27. And then we have sales growth around 16.87%. Now, Spotify, the music streaming service, I believe does have a competitive advantage in the fact that its customers can become quite sticky. Because if you've ever created a playlist on Spotify, you'll know that Spotify uses artificial intelligence to actually select other songs which you may also like. And once you've created a playlist in Spotify and you've created a few playlists, you put that work in, would you be inclined to move to a different platform or a different provider? So I personally don't think so for people that are really into their music, but maybe people who don't really use it that much would be inclined to move to other platforms such as Amazon Music, Apple Music, which are major competitors. And that is why there has been a few headwinds against Spotify recently due to this competition. Okay, so now into the last 3 stocks, and that is Angora. So ticker symbol for this is API, and this makes up 2.96% of the ETF. So Angora is an interesting one. It basically offers the building blocks for software developers to build video streaming and audio streaming platforms. So here's something interesting this company did recently with a partner. So they supported more than 50,000 concurrent video users in one fully interactive classroom in South Asia. So you can imagine this is a fully interactive classroom of around 50,000 people, which is a hell of a lot of people in one classroom. So diving into the price of sales for this company, wow, price of sales is so low, just 0.3. So you're only paying 0.3 times the company's current sales. Price to free cash flow, 2.4. Price to book value, 0.35. So this is actually great value right now. Market cap around $60 million. So this is a tiny micro cap company, but still the valuation is looking very, very good at the moment. So this could definitely be an interesting one. However, let's check out the sales growth. So the sales growth has been on a major decline, minus 34%. So I'm surprised this company didn't benefit from the whole global lockdown. The sales seem to have been hit by 34%, which isn't great. And the balance sheet is terrible with a 0.79 on the current ratio. So yeah, usually when you see a low valuation like that, it's for a reason. And yeah, so that's the issue with that company, but definitely one to watch, and I think definitely an interesting one to keep your eye on, which I don't think many people will actually spot because they won't know about this company. Okay, on to stock number 2, we have Netflix, ticker symbol NFLX, and this makes up 2.42% of the ETF. Of course, we know Netflix is a major video streaming provider. However, we do need to be aware that Netflix is facing increasing competition from platforms such as Disney Plus and even Amazon Prime Video. However, let's dive into numbers anyway. So price to sales for this company is 9.56. This company is also profitable, so we can check out the PE ratio, which is 52.9, which is extremely high, probably double what the average is of the market. The sales growth for this company is pretty good though. Sales growth 21.53% for such a massive company like this. That is great to see. So yeah, definitely Netflix is definitely an interesting one to watch. You can't really go wrong with Netflix. It's just whether Netflix can continue growing ahead of Disney Plus. Okay, on to stock number 1, and that is C Limited, ticker symbol SE. This makes up 2.18% of the ETF. So C Limited stock has actually risen by over 500% in 2020. So congratulations to those of you guys which invested into this company. So the company is basically a consumer internet company based in Southeast Asia. So diving into the price sales for this company, you got price sales of 31.65. So that is extremely high, this company's valuation. However, the growth for this company has been tremendous, especially due to this whole global issue. So 98.67% on the growth rate, so nearly 100% growth rate per year. That is incredible. Even the past few years, it was also growing at 84.63%. This company is extremely popular with many hedge funds at the moment who have been investing into this company. It's definitely on my watch list, and if this company does take a major dive, I'd definitely load up the truck on this business, assuming the fundamentals haven't been affected. Okay, so that's the top 10 holdings. What are my 3 favorites? Well, I do love C Limited. I'd definitely like to get in that stock on a major pullback. I also like Tencent and Square. These are all stocks which, if they had a major pullback, I'd probably load up the truck on them. I'd love to hear your thoughts, so please do comment below. If you guys did find any value in this video at all, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. If you're new around here and you still haven't subscribed, what are you waiting for? Feel free, join the investing family and turn that notification bell on. If you do want to talk to me directly about your own investing portfolio, about your own life decisions, if you do want to access exactly which stocks I'm buying, which stocks I'm selling, in addition to my entire investment portfolio, then check out that first link in the description below for the VIP membership group. With that being said, thank you guys so much for watching. I hope you guys have an incredible day, and I'll see you guys all in my next video. Invest safe.